Yeah, so good morning. We're going to be introducing LendInvest. So we're a peer-to-peer platform for mortgages. So I'm told I've got 7 minutes and 5 slides, so it's not a long time to introduce the business. But basically, just sort of keen to introduce the concept, and actually I'm not going to walk through a demonstration of the platform, but instead walk you through the journey that we went on to sort of come about to get involved in the peer-to-peer space. So I'm Christian Fays, co-founder of LendInvest, and also managing partner of Montello. In terms of my background, I'm a lawyer by background, used to be a real estate lawyer in Australia, and then practiced corporate finance law in the UK. So we think our story is interesting, and it's something that differentiates us in terms of the other platforms that are in the peer-to-peer space. We're different in the sense that we are essentially an existing mortgage lending business that's taking our platform online for investors. So in terms of the background to that story, we set up a business called Montello in 2008, which is a specialist short-term mortgage lender. Originally, when we set that business up, we had a couple of high net worth investors that would essentially invest on a deal-by-deal basis. So we would package the transaction, then take it to the investor and see if they were interested in doing it. It was a very old school way for us to operate, so meeting with the investor, telephone calls and so forth, and certainly a very frustrating way for us to get any scale in terms of establishing ourselves as a mortgage lender in the market. So we set up a fund, and now under the Montello brand, we have 3 funds and about £100 million under management. So we have a balance sheet that we can lend from, and we've got a very active presence in the short-term mortgage market in the UK. But we've always had investors that were quite interested to select their own deals. They wanted to create their own portfolios and essentially not invest in a fund. They wanted to sort of take control of their own investments. So we started to naturally look at the peer-to-peer space and everything that was going on and see if it was something that we could embrace in terms of what we were doing. So just jumping around a little bit, but just to sort of give a background in terms of the market that we're operating in. So in the UK mortgage market, there's a huge funding gap. Even by best estimates, lending this year will sort of be 50% of what it was in 2006 and 2007. And in terms of what we've been able to achieve as an operator in the short-term mortgage space, they're really stellar returns. So our sort of core fund on the Montello side of things is the Montello Income Fund. We've been paying investors for the last 4.5 years a fixed return of 8.5% per annum. So really stellar returns. And just to sort of give you a flavour in terms of what that mortgage book looks like, it's in terms of duration, it's sort of usually 5 to 6 months. So quite an attractive liquid asset class. Loan to values typically sort of between 60 and 65%. So it's not particularly aggressive in terms of where we sit on the risk curve. And also, obviously, all loans were secured by first charge. So a pretty sound conservative risk profile and obviously pretty stellar returns for investors. So we obviously looking at the peer-to-peer space in the UK, you've got the unsecured side, Zopa and RateSetter, and then Funding Circle with the SME lending. All of those platforms are actually offering a much lower return than what we've been providing investors with a secured fixed mortgage proposition. So naturally, we thought that if we could wrap this up in the peer-to-peer model, then it would be hugely attractive for investors. So we launched LendInvest in May last year. We see it as a huge benefit coming as an existing mortgage lender for a couple of reasons. So one of them is that we have deal flow. So we see sort of 50 to 100 million a month in terms of loan applications. So we've got the origination side of things relatively sorted out. And also we've been lending for 6 years. So certainly our first couple of years were our worst couple of years of lending. I think, we made mistakes and we learned from them. Actually, now we have really sound loan underwriting criteria and, a really sound loan book. The other thing is we're operating very much as it's essentially securitizing our loans out to the crowd. So we're using our balance sheet. We originate the loans on the Montello side, and then we essentially offer them up on the platform for investors to invest in. So investors can go into the platform, create their own portfolio and sort of assess, they can determine what sort of risk they're happy to take on, what sort of return they're trying to achieve, and what sort of geographical area they want to lend in and so forth. A couple of reasons why that's great, we think, is because investors start earning a return from day one. So the average loan size for us is about £500,000 to £600,000. It doesn't have to go up to an auction process where, you know, perhaps it gets funded or perhaps it doesn't. Investors have comfort that they earn their return from day one. And secondly, borrowers have comfort that we have funding. So that's one of the sort of critical things we think in terms of to generate quality deal flow. Borrowers have to have certainty that they're going to get funded. If it has to go up to an auction for a number of days or weeks and then it fails, that's sort of, you know, you're naturally going to get a poorer quality of loan applicant, we think. Where we're at, a couple of milestones. We've lent about £36 million through the platform. We've got about 1,000 registered users. We were really excited because earlier in the year we did what was apparently the world's largest peer-to-peer loan for £4.1 million. Exciting for us because we were featured on the front page of the Financial Times, which was exciting because the Financial Times and I guess a lot of the financial press is a little bit skeptical of peer-to-peer. Certainly in the UK that is the perception. And also a loan for £4.1 million is sort of wouldn't even register any interest normally in financial markets, but to be profiled on the front page was particularly exciting. And their quote was, you know, it marks a dramatic shift in the sorts of funding that's available. In terms of where we are in terms of building the platform out, we're currently looking at a secondary market. So what we want to do is we're very sort of great in the short-term mortgage market, but that's not infinitely scalable. So we're developing other niche mortgage products. So the first one we're doing is a 3-year mortgage, the sort of medium-term mortgage, we've phrased it. That's a big funding gap in the mortgage space. So in the UK, typically mortgages are for, you know, 20 or 30 years with fairly high loan redemption penalties early on. So sort of creating new mortgage products. Secondary market in the tech is quite important for that, and also auto bidding and that sort of functionality. And I think I'm pretty much out of time. So what I would say is we've got a stand here, and if anyone's interested in hearing more about our platform, please do come and have a chat with us.